Alphabet's Q2 2026 financials just dropped. And let me tell you, this is not your standard earnings report. We're going under the hood together in this explainer to see exactly how their aggressive AI bets are reshaping the tech market in real time. If you want to know where the entire sector is heading, you look at what Alphabet just did. Okay, let's dive into this. $119.8 billion in a single quarter. This isn't just a win. That massive top-line scale alone completely redefines what we expect from big tech. We're talking about an explosive 24% year-over-year revenue jump, up from $96.4 billion last year. For a company already operating at this Titan-level scale, stringing together 12 consecutive quarters of double-digit growth is an incredible, almost gravitational defiance. They aren't just holding ground, they're accelerating. Section 1. Growth and AI Catalysts. CEO Sundar Pichai stated it plainly. Our AI investments are redefining what's possible across every part of our business. This right here is the critical transition. The narrative is no longer just about traditional search revenue. AI is fundamentally and structurally redefining their entire business model from the ground up. And this isn't just Silicon Valley hype, folks. These are real-world enterprise adoption metrics acting as massive growth catalysts. Nearly 90% of the Fortune 100 are already using Gemini Enterprise. They are processing 22 billion API tokens, the basic computational units of AI processing, every single minute. The Gemini app? 950 million monthly active users. Plus, they just released the highly cost-efficient Gemini 3.5 Flash Cyber, pushing the frontier of enterprise security. The real-world integration here is absolute. Section 2. Financial Health Breakdown. Now, what's really interesting about this slide is the stark contrast in these growth engines. On one hand, you have the legacy cash cow, a very solid, robust 15% growth in Google services. But on the other hand, you have the rocket ship, an absolute 82% explosion in Google Cloud revenue, hitting nearly $25 billion. That is raw, unadulterated enterprise demand for AI infrastructure playing out in real time. Then we look at the bottom line, $112.1 billion in net income. That is a jaw-dropping 298% surge. Let that sink in for just a second. A near 300% jump in net income for a trillion-dollar company is an absolute anomaly. So where exactly is that coming from? Well, don't be fooled by the headline number alone. This massive net income spike is what we call an other income anomaly. Out of that massive haul, $98 billion is a net gain primarily resulting from unrealized gains on their equity securities. Essentially, these are paper profits from their investment portfolio, not some sudden miracle in their day-to-day operations. You have to strip that out to see the real operational engine at play. So let's ground ourselves back in reality with their actual core operations. Even without that massive equity anomaly, their core operating income surged 30% to $40.7 billion. And the really crucial point here is the operating margin. It expanded by 2 full percentage points to a highly efficient 34%. Their core is expanding beautifully. But look, explosive growth takes fuel. Notice their recent capital trajectory. They secured $49.6 billion from an equity capital raise and another $20.3 billion from issuing senior unsecured notes. Why? Because they're aggressively and strategically leveraging debt and equity capital specifically to fund capital expenditures. They are spending heavily to scale their global AI compute infrastructure before anyone else can even catch up. Section 3. Sector and Competitor Landscape. And this brilliantly illustrates where they stand in the broader market. Google advertising is clearly still the massive $81.6 billion elephant in the room, but that rapidly expanding cloud slice, now nearly $25 billion, proves they aren't just relying on traditional ads anymore. They're successfully dominating the frontier of the sector, converting enterprise AI demand directly into massive cloud revenue. The core takeaway for us here is this single concept, their differentiated, full-stack approach to AI. Alphabet is building and controlling everything from their own custom silicon, their TPU hardware chips, to the foundational models like Gemini, right up to the end-user applications. This end-to-end control gives them a unique, almost unassailable moat in today's highly competitive tech sector. So we have to ask the multi-billion-dollar question. With an explosive 82% cloud growth and 90% of the Fortune 100 already locked into their AI ecosystem, does this make Alphabet the untouchable giant of the tech sector right now? Take a hard look at these numbers and question the broader market's ability to keep up. Because right now, this is the new reality.